Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the last week and a look forward at what might happen in the coming week. Well, the markets last week spent the better part of 4 days moving sideways, waiting for the FOMC. Well, it turns out, based on market action, most people were caught leaning. The expectation was that rates would go up. And if that were the case, well, we would see some moves in the market reflective of that. People would have thought that, well, bond market would have moved to the downside and the stock market would have, well, my opinion, celebrated for a couple minutes. And we had a lot of people thinking a rate increase would finally get it out of the way and we'd have a rally. But what happened was that, well, they didn't do anything. And what we had was a stock market pop that came right up to the resistance area that we were talking about, a little bit through it, and then reversed in a big way, fell hard in the afternoon, and then fell also on Friday. So we had a market that I would say really caught people leaning. Bonds ended up moving quite sharply to the upside, and gold also did follow that as the dollar took a big hit to the downside. So we had a lot of movement after the FOMC meeting. As far as what I thought was going to happen on the meeting and what I think a lot of people were leaning towards, wrong, mostly. In the coming of the rest of the show, we have a lot of interesting things, and I think you're going to enjoy hearing my outrage at what the CNN debate looked like, and a lot of issues there that are not being asked about, and a lot of questions that should not be asked. Instead, well, we heard a lot of nonsense. And that especially because it was led by some pretty poor moderators there at CNN, and I'm going to be all over that one as you listen to my rant later on in this show, especially at the Fed, who after 6 years at 0% interest rates has nothing left at all to do, and we're looking at, well, what they talk about is global weakness, and they're focusing on that. And what are they going to do now if there is a crisis here? You got to really wonder about this. So I'm going to be all over that one too later on. Of course, we're going to look at your emails, some great ones out there. Next few weeks, we've got some great interviews coming up. Mercedes Esterman Van Essen will be back. We're going to be talking about fear and triggers. We've got a couple other technical analysts going to come on also. Well known in a few weeks, we'll have Carolyn Borden as we discuss her approach to Fibonacci's. Carolyn, known as the Fibonacci Queen. So that all coming up in the next few weeks right here on Market Week. So as we always do, we look back at what happened in the last week, and we're going to do that now as we look at this 60-minute chart of the S&P 500 ES and take a look at that one right here. So what we do when we do this is look at the gray areas, which are overnight trading, see how the overnight news was, how it affected the markets, and then also look at the white areas, which are the actual trading during the day. So here we have a 60-minute chart in ES that for the last 5 days is what we're looking at. So, well, we'll start out on Monday or Sunday night. Economic data out of China was still weak. The markets were soft overnight. China down 2.7%. The Eurozone also soft. ES was choppy overnight, as you can see right in here, and it had a range of, well, up 17 points early in the day, all the way to minus 3 points and turned even weaker into the first hour, all awaiting now the FOMC announcement. There was a BABA article that came out that said BABA could drop 50%. That stock moved lower, but then did better later in the week. Apple said sales were strong, and the stock moved up small. GoPro, which has been annihilated, gets a big bounce. And the steel stocks on the day, the big losers, down 4 to 5%. So our thoughts for the week actually were that we would see the market flounder a little bit, but then have a move up and into the Fed. And we thought 2012 was the upside in the S&P 500 cash. It actually got about 8 points through there, and we thought it would fail from there, and it sure did. So followed our pattern nicely. Tuesday, China again on the downside, but the Eurozone got to the upside. Consumer spending was strong, and U.S. market firmed, especially on that news, with S&P 500 gaining 22 points on the day. Big mover in there was Seadrill, which canceled a contract, SDRL, and overall those drillers that we had our eyes on have been doing pretty well. So we saw that bottom coming out in there. Here on Wednesday, you can see, well, the market started to get this overnight flatness as they did on Thursday, as everybody was waiting for the FOMC. President of China investigates the biggest broker there, and China up 5%. How do you like that one? Eurozone up also. Japan was cut by S&P as Abenomics not working. Big shock there. Hewlett-Packard cuts 30,000 more jobs, and everybody's still blaming this loss of now over 100,000 jobs on Carly Fiorina. Anything to blame one of the Republicans, right? Head of the Fed, Goldman, says the markets, due to the FOMC, are unprepared and vulnerable. How do you like that? Fed members and analysts can't agree on anything as far as what the Fed is going to do, and we all know what they did by now. Oil was up, and drillers gained 3 to 5% again, and gold was up strongly in here. Gold, silver stocks up 4 to 6%. On Thursday, we have China moving down, Eurozone and the U.S. market also a little bit on the soft side overnight. Everybody waiting for the Fed. We had rallies into this Fed. Everybody anticipating that the Fed would finally get it done, raise rates, and that the markets would like that because it would be out of the way. I even thought they were going to do that, but then fail. Well, I was wrong about the Fed, but sure right about the pattern on the markets. Investor and FOMC, they hold rates steady. They say there's uncertainty. Janet Yellen says the pace of job gains are solid, but inflation is still low. But there are global concerns. That global concern, those two words, are what really have had the markets moving to the downside. All of a sudden, because Yellen says there are global concerns, Lacker was a dissenter. The one dissenter thought rates should go up. And they still say rate hikes are data dependent. In other words, they're willing to look forward and saying, well, everything is slow right now and we don't see anything to change inflation in the future, but they're still data dependent. So go figure, those are the people running our economy. American Eagle Outfitter up 4% as a misspelled chairman buys 500,000 shares of the stock. Verizon loses 3% as they say their outlook is flat for the next year. Eli Lilly, LLY, gained 6% on favorable results on a diabetes drug and continues to be strong even on Friday. United Airlines, Spirit Airlines, Copa all have big gains as Barclays says he is bullish on the group, and a decline in oil on Friday also doesn't hurt. On Friday, well, after this big failure, look at this day on Thursday as that big spike comes, pushes the S&Ps up. The big failure afterwards is, global concerns. Europe stocks, well, on Friday they opened down sharply. DAX, CAC 40 in France, they're down 2.5%. Japan down 2%. China's flat, actually up about 1/3%. And Adobe up 4% on an earnings beat. That is one of the better stocks of the day. It's fallen back a little bit to be up about 3% right now. We have some good gains on Friday also in these silver and gold stocks as gold continues to move up, now in resistance. I'll show you that in the at the end of the show as we look at the short-term view. Oils, materials, they of course lead on the downside as oil turned down, and oil is falling as a result of the economic global growth concerns. Man, we're going to hear a lot of that from me, like they made this fantastic discovery all of a sudden. The global economy is slow. All right, so the next thing we're going to look at here is the calendar coming up for the rest of the week. We look at this earnings calendar and the economic events. The economic events, well, we've seen the big one come out last week, and there's we'll call it a lot of little ones. Maybe the biggest economic event this week would be on Friday when we get the GDP coming out. Right there, you can see at 8:30 Eastern Time on Friday, consumer sentiment could get a little move to the market, and I don't really see a lot of other market-moving events in here for the week. Earnings-wise, well, Lennar in a bullish home builder group comes out Monday before the opening. Red Hat is after the opening. We have Tuesday, ConAgra, Carnival Cruise Line, Darden, which I don't understand how it's up where it is, GIS, which is General Mills, and CarMax. And Thursday we have KB Home, and that is one that I'm going to mention just a little bit later in the show. Again, I'm going to reiterate what I think is a bullish home builder group. Best Buy, terrible pattern. It's going to have to do some miracle report in here to avoid more on the downside. Nike gave a little bit of a sell signal in there. Take a look at a Harami cross in Nike on the daily chart, and I think this one is ready for a correction, some kind of a mid-range test on that big flash crash low it had. Looking for some downside in there. Yep, I shorted a little bit of it today. And then BlackBerry, a stock that was trading in the 11s, and I said it would go into the 7s or lower, and there we are. So that stock, I think, still has got major problems. So that is a look at the economic calendar for the week. The best of the week is coming up, and I think you're going to enjoy that. And again, lots of great stuff coming in the rest of the show. And I'll see you in a couple seconds. For the best of the week, a lot of stocks did make some good upside ground. Well, it was an upside biased week, so that would be expected. We have a few stocks, though, that had some good patterns and some that really exploded to the upside. We're going to look at 5 of those here, stocks that I think are worthy of a look right now in this best of the week segment. Take a look here at Seadrill. I have been really, favorable, thinking there was a bottom coming in these groups. And we have had these bottoms that have been forming, nice upticks here. Take a look at this weekly pattern, and you will see that there is this bullish engulfing here right as this one big cycle is turning up. That's a nice pattern in there, and we'll be looking for potential move even further here in Seadrill. So I'm liking that one. It had a 9% up day this week. Take a look here at this chart on the daily chart, and this is really a good looking W bottom. The low here with this doji bottom, and then the low here with this island reversal. Those 2 days down there make an island, and the 4 days there make a morning star bottom as it moved to the upside. The stock has a potential to get up to this level right over here, that 89-day moving average Seadrill. So that is, of course, an offshore drilling stock, and we have seen oil firm up some, so that is why you see this upside nice W bottom forming in here, and we expect to see this downside momentum, which has been in place, fairly soon turn into upside momentum. So Seadrill, a nice looking one in there. take a look at a few others. The overall, the drillers had a good week. That's the only one we're going to look at. But take a look at Eli Lilly, LLY, as this stock had a major surge on a results of a diabetes drug. And this one has been just absolutely loving this 34-week moving average all the way up here, my favorite moving average on the weekly. And this was a time when it looked like it could be rolling over, but then that news comes out. We are getting into a corrective period. Eli Lilly is not one that I would chase on the upside here. I am looking for a pullback, but it also isn't one that's a candidate for a short side trade for me either. Big volume comes in buying this thing on the upside, and then it gives up some ground. So we'll look for a pullback in here in what is a very good stock. Now, United Airlines got a nice, what is that? We got the Eli Lilly news that came out there. Let's switch over here to Eli Lilly to United Airlines. From Eli Lilly, and this is a very interesting pattern on United Airlines. And I wondered how you could, with the weak oil prices, these stocks give up much ground. And what happened was that it had a fake out downside break over here, and then moves up and gets up to this resistance area. As we had positive comments out of Barclays this week that lifted airlines, Copa, CPA, and Spirit, SAVE, also big movers. Delta looking like a very nice pattern also, and this one gets up into this resistance area. Now, what I really expect in here is to see something like this kind of action. You can see we looked for that. Pullback in there, but now it improved the pattern. So it would be something like this, and then as we get over here into October, then moving up strongly here. I think this entire airline group is looking very good, and we're going to be looking for opportunities to be buyers in there in the airlines. Expedia on this OWW deal, EXPE, moves nicely to the upside, and here you can see a pattern that looks to me like this is looking like it should roll over. The other ones in the group don't look very good at all to me, and this one is so due for a major correction in here. On this news, it got this very nice lift. You can see our where the Justice Department granted antitrust clearance for the takeover of OWW. So the stock breaks out of this wedge pattern on the upside and moves up to a new high. I am very suspicious of this move, and I would look for a pullback into October in there in Expedia. The next one is Amazon. This is a stock that I have been saying has had a beautiful pattern in there. I've really loved it. You can see the bullish pattern here. These two timing spikes here were our suggested period of when the low would come, and you can see how that worked out perfectly. It's in this green zone and rising. I expect it to get up here into the high 500s. I've said that before. So every time there's a pullback in Amazon, I think you have to buy it. I think it's really in a very good shape. So those were some of the best stocks as far as how they traded for the week. I always like to throw in a little commentary on some stocks that I'm looking at as potential buys, and I think this is going to be a highly volatile market still. That means we always want to wait for the opportune moments. We have Yahoo is one that to me looks like it's bottoming. Alibaba's got a W bottom in there, and it trades a lot with Alibaba, so that one is setting up to me for some potential upside. I mentioned last week in my segment that I did on stock sectors that one of the stock sectors I really thought was in good shape was the home builders, and so there's a stock in there, KB Home, KBH, that I'm looking at also, and I still like the drillers. I still think that there's going to be opportunity in there. Wait for the right moments to buy them when there's some pullback. Halliburton, NOV, National Oil Well, and Diamond Offshore have some nice patterns in there that look like bouncing candidates. So some bottoming in place, and looks like they can make some upside. So that is the best of the week. Ooh. Well, with the market that, well, was in pretty good shape this week, we didn't see a lot of stocks that took many hits. Some stocks, well, they pulled back sharply some days when they had some big gains for the week already. Navistar is a good example of that, having a really bad down day after some gains. And Wynn Resorts, WYNN, did pretty much the same thing, big gains, and they had a pretty good pullback. Well, there are sellers out there and waiting for opportunities as things tick up. We actually saw that after the Fed news when there was a big upside rally, hit resistance, and the sellers came in a big way. Two stocks that I would categorize as the worst of the week are Into, INTU, and Oracle, ORCL. They actually had almost identical patterns, and both on the intermediate term and shorter term. Let's take a look at this. This is the Into chart, INTU, and what we're looking at in here is the potential for another low in here. In other words, a test of that bottom that you can see right there. Let's blow that up and you can see what we're looking at here, and that is that the next low is due in the next couple of weeks. So we believe that this is a wedge pattern. Now you want to see proof of that. First of all, before I switch off of this chart, take a look at this 34-week moving average and the power of that as it's been the upside trend here. When it broke down here, well, that was over with. And so the stock went into a consolidation pattern. You see the massive downside break here on the huge volume. A consolidation pattern where it made this wedge, this rising wedge, and then broke down here. So we believe it's going to test that area of about 80 in the next couple of weeks. And that should be the low for the move here. But this is a bad looking stock. Take a look at Oracle, ORCL. You're going to think I'm putting up the same chart. There is the Oracle chart, and a very, very similar look after a big decline, and then had this breakdown in here from this wedge. So this looks to me like a pattern that is in trouble, and when we look at the weekly chart, it's suggestive differently on the intermediate chart that this low only has another week or so to go, test that bottom at the most, and then likely to start moving to the upside again. So Oracle not looking to me as bad as Into is, even though they both had pretty bad patterns. I actually think Oracle's in the next dip is going to make a pretty significant low. So that are the two stocks that I think were the worst of the week as far as the patterns go. Now we're coming into a week that I think is going to be highly volatile again. We had this failure off of the resistance area, and I'll talk about this in the short-term view later on in the show, where the S&Ps got up into this area of resistance and through it. A target I don't think anybody could have said it was going to, which was over the 2012 level in the S&P 500. It got through there by some 8 points and then immediately turned around, left a big shooting star, and sellers came in pretty significantly at that level. So I think we're going to see choppiness ahead here, pullback and then a rally, and the stocks that I think are sales are stocks that I think you've got to be patient for and wait for your price. You don't want to just be short them when we're in a market that is ready to start to have one of these chops to the upside. I mentioned in the best of the week that Expedia, EXPE, this big gain it had on this or takeover of Orbitz, OWW, that to me does not look like it's one that can hold. I'm looking for a pullback in Expedia. Two restaurant stocks that I think are ready to move to the downside again, only have slight little upside potential are McDonald's and Panera. I think those are stocks I'm looking for on the downside. Three stocks I actually going to mention price levels. I don't normally do this, but again, I want to wait for the right moments that I have marked down on my charts. And on my notes about my charts, and Federal Express FDX in the 152 to fit 154 area. That looks like the sell area to me. MasterCard around the area of $94. And the last one is Costco, C-O-S-T. That looks like a pretty bad pattern to me. And in the area of 144, 145, that's the zone I want to sell those in. As I think, again, patience and you'll get the price, and they probably will pay. Of course, it's all odds, because I'm one that looks at charts and just wants to trade what I think are favorable entries. That's it for the worst of the week, and I'll be right back.
Hi, I'm Epiphany, your askSlim spokesperson. Here's important news you can use. With the askSlim memberships, you can raise your probability of success as a trader or self-directed investor. Be better prepared for the coming week and make informed decisions when you watch our weekly show, the askSlim Market Week. Archives to the show and more are in Level 1. In our videos in Level 2, get help with trades for all styles of market participation. Better understand 6 sectors of the futures markets, learn technical tools, manage the impact of your emotions, and apply analysis of stock sectors in the big picture of the major markets, and you'll have access to our ever-growing video library. Level 3 is our trader support. Call it Coaching Light. Ask Slim for personalized help by email on the technical, strategic, and psychological aspects of trading. Or go all in with Slim's charts right on your TOS platform. Level 4 gets weekly updates with annotated charts on over 300 widely followed stocks, futures, indexes, and ETFs. Slim's unique cycle charts add the dimension of timing to help you improve your own analysis and strategic approach to the markets. Learn more and choose the membership that works best for you at www.askslim.com/membership.
Well, I was watching the Republican debate. That's the one that CNN did just the other day. And man, I got to tell you, I was cringing. A lot of it was, well, ridiculous. As if the questions were set up just to have the candidates attack each other, talk about each other, versus talking about real issues, about how to solve things, and about what their policies are going to look like. There were stupid questions and really on stupid statements. I don't understand why we care about what Trump says about Carly Fiorina's face when there are so many other things there to talk about. And, it's about problem solving, about real issues. How about these 20 when they set up the next debate, or whether it be Democratic or Republican, or whether it be when we get down to just one presidential nominee on either side. Foreign policy. We have $45 billion in foreign aid going out. Who's our friends? Who's not our friends? We make a deal with Iran, who has clearly been an enemy, and who constantly threaten Israel, say they won't be around in 25 years, have threatened us. This deal is absolutely insane. We also need to deal with rogue states like North Korea, who actually has nukes and is constantly threatening South Korea down there. And how about Assad? And the travesty that's going on in Syria. What about the issue of terrorism and Islamist extremists and ISIS? We need a leader out there that is going to bring in the UN and is going to stop any genocide that is going on in this world. And we have not had a leader. Obama has not done that at all. So what about that issue? And what about immigration? We've got an immigration law that is a travesty. We have to deal with laws because we're not dealing with sanctuary cities. We don't actually follow our laws, do we? We have a president that will selectively decide which laws need to be enforced, and our immigration policies the problem with that has to end. That goes all the way into issues also about welfare, because there is massive abuses there in welfare. We have to end the nanny state that gives 47 million people food stamps, and some 150 million people, nearly 50% of society, gets something from some government entity. If we would stop all of that and we would get immigration under control, then we wouldn't have illegals filling jobs that people are on welfare could take. But we don't have anybody out there talking about that issue because it's not politically correct. What about our public pensions? I don't hear anybody talking about more than $100 trillion in unfunded liabilities, a time bomb out there that is ticking. What about the collision? Well, we hear a bit about this of law and religious rights, gay rights, as we now have that going on. That's something that has to be solved. We have some talk about that, but nobody is really coming up with solid answers. And women's rights. Should there be public funding for Planned Parenthood? For anything that's related to that. We need to solve a big issue there. They're not coming up with answers on that one. Obamacare. There's Republicans. Where is your viable alternative to this? This policy that is filled with confiscatory mandates, essentially telling us what we need to do and what we need to buy. And this is a job killer out there. You want to know why we have, almost 11% unemployment rate in U6 because of all the part-time work out there? That's why we have it. But where's the people coming up with viable alternatives to a very, very bad program? You could come up with other alternatives like universal health care, but take a look in Canada and you'll see 18 to 30 week waits to go see a doctor. So a lot of these answers they're coming up with are not very, very good. I'm going down the list here of policies that they're not talking about and that we have CNN asking ridiculous questions. How about Common Core? We put all the kids into a box, give them the same standards of learning, and then we encumber them with testing. And what about those kids out there that are going to excel? This is not a good solution to make everybody learn the same way, and I hope that they come out and revoke these Common Core policies. What about education costs? A lot of people are not talking about that. We have massive college inflation. Where does that come from? Well, we make loans to students that we shouldn't make loans to. We have an enormous dropout rate in the area of 44%, $1.4 trillion in money out there that is owned by students. And we're really talking about forgiveness. All of these things encourage these colleges to raise their prices because we make the money too easy. Everybody's not supposed to go to college. There's many other avenues to take out there in entrepreneurship or learning trades, but we push people to go into college, and that makes these salaries go up and pensions go up, and it makes costs go up to education, and it makes it less affordable. Somebody has to deal with those issues, and they're not talking about. How about decriminalizing drugs? Our prisons are filled with people in there, with kids that make mistakes and that are essentially learning to be criminals while they're in our prisons rather than getting help. So we need to decriminalize drugs, and there's not enough being said out there about that. Race relations, man, you can't tell me that since we've had a black president, things have gotten better. Black leaders, they speak selectively about these issues, and we need to get black leaders out there doing something that is talking about these issues in a way for blacks and whites and for everybody. Black Lives Matter advocates killing police. We don't have enough of the black leaders and President Obama and those people speaking up against that, and we have to, in these debates, bring up these really, really tough subjects. Where are those conversations? I want to know. CNN in case rather than the things that you're talking about. I'm still going down the line here about our economy. We have an FOMC. We've seen them now holding rates for some 6 years at zero. We have academics running our country, and we're allowing the liberals to do that, and there's no accountability to what they do. What happens on our next crisis and we have 0% interest rates? It's stupid stuff, and we're not talking about this. The FOMC is responsible for our wide economic swings, and we need to do something about taking the control away from 12 academic bankers and run this country the way it's supposed to be run, with sensible governance. That takes us to the size of government, doesn't it? By the time the next president gets in there, they're going to have a $20 trillion debt. $20 trillion debt. It is incredible about this size of government. Over 2,000 departments and agencies in our government. Deficit spending, out of control, sensible governance, not even in the picture. Why aren't they talking about that stuff? How about defense spending? 662 sizable military bases in 38 countries in the U.S. I think that we need to have a powerful defense, but do we need to have these massive amount of military in areas that, well, huge number in Germany, huge number in Hawaii? Are we worried about Germany attacking us? Do we need to control Europe that way? Stupid stuff, and nobody's talking about that, about getting our government under control and spending under control. If we would do that, we'd have the money for, well, education, for people that really need it. And how about repair of our infrastructure that everybody talks about? Well, we've got to spend that money. We don't have the money. Nobody talks about we can't spend money that we don't have, and we need to get these conversations going on in the debates instead of the stupid conversations that we're having right now. How about the environment? The government spends $22 billion on environmental issues that we don't even know if it's true science. We could be spending some of that on education and on our infrastructure also, and tax reform. I mean, how about that one? When we have a tax code that is extraordinarily massive. We have insane tax laws. We have insane tax levels. Corporate tax level, the biggest in the world. No wonder our money is going out to other countries and won't come back here. If the money would come back here, we'd get growth. We'd have job growth. That's another big thing. How about our job growth? It looks like we have decent job growth, but we don't. 200,000 average jobs created a month, and a 5.1% unemployment rate that's based on 0% interest policy. It's ridiculous stuff, and they're not talking about it. How about gun control? 300 plus million guns here, and we're talking about taking guns away from owners. You do that in this country like Australia did, where they confiscated the guns from everybody. There's going to be an uprising in this country that's going to be chaotic. We need to come up with solutions about people getting guns that shouldn't get guns. There are so many other things. One of the biggest ones that Bernie Sanders is talking about, his signature issue, is income inequality. Stop aiming at high earners, and let's describe and come up with policies that encourage small business. Obamacare is a job killer, and we need to help people in low income, and we need to help people in inner cities understand that there are paths to success for them, and to also lift them into the middle class and lift the middle class. We do that through free enterprise, and we don't have enough discussion about free enterprise, and enough discussion about getting rid of all of these people that are dependent on our government rather than becoming self-reliant. Boy, I could go on and on. We have too much going on in these in the media that's focusing on ridiculous things. We talked about now what the focus should be. So right now, well, there's not a lot of progress on most of these things that we just talked about. What do I want you to do? I want voters to rebel. I want a whole new paradigm of leaders in there, and you can do it. And when you can, rant, rant, rant. All right, this is the short-term view. This is when I look at the markets in a pretty short-term period, 4 days to about 7 days. Sometime talk about it a little further out there, but we're really only looking at the daily charts here. What I do focus on also is the action in the weeklies, of course, because that is where the dominant forces come from, and I use the shorter-term patterns to help me find what I think the major patterns are doing. In other words, if the short-term patterns are doing something different, then I question what I'm seeing in the longer-term patterns. If they are moving as expected, then that helps me believe that my intermediate-term analysis is pretty close. So always use those. Always also look at correlations between markets. I think between using shorter term and longer term and the correlations of markets, it can really give you an edge on this analysis. You see me do pretty well over many weeks, even years. This week I'm going to give myself about 60%. There are one market I missed in a big way was the euro. That really was greatly affected by the FOMC, which the dollar fell quite sharply on the FOMC news. Everybody figured higher rates attracts the dollar, so everybody got caught leaning on that one, and I did also based on my opinion. As far as light crude and the S&P 500, I absolutely nailed those right on. Gold, I get about half credit based on the shape of what I thought was going to happen, but the amplitude of the magnitude of the move and the level it rallied to was different than I expected. Also, the bond market, I expected big down, and we got big down. I got a ton of emails of people that had made a lot of money based on that, and truth is that it turned up late in the week, also based on the FOMC, which was, well, much stronger than I expected the bond market to act. So overall, we'll call it 60%. I tend to grade myself a little bit on the conservative side, but still not bad overall. Let's take a look at these patterns and look at what is going to happen in the next week, at least what the patterns suggest is going to happen, and let's hope that we get this mostly right. Here is light crude /CL. So I had thought it would get down to the area of about the 43.30 area right here. It actually missed that by just some cents. And then I also thought that it would rally to about the 47.50 area. It got through that by just a few cents right there. So that was, is spot on, like I had a crystal ball, as you could see. Let's see how my crystal ball is working for the next week, because I actually think that this is going to be a down week. That's this right in here. You could see the doji star and you could see the evening star forming. That gives you some sense that there is selling coming in this area. We had it move up through this wedge pattern in here and didn't get a lot of rally out of there. It tried to, but now failing. And the cyclical patterns do suggest that we're going to see a decline for the next week right in here. So we're going to look for a test of that 43.44 number to set up, and that's a buy area, this rally in here to 49 to 51 as it gets into this resistance zone in this rising phase. So we're looking for a down week, and we're looking for that setting up in a couple of weeks a good upside move. Again, 43.44 would be a sweet area to be buying in here for that next rally. Let's see if it gets that kind of pullback, as it's now trading around 45.50 as I now do this show. The next thing we're going to look at is the gold market, which last week I thought would pull back, be kind of sloppy, and then move up late. It did that actually, and but I did not give it credit for the amount that it moved up. That changes the direction of this downtrend in here. The downtrend doesn't go away. What happened was we got this earlier low, and we got this help from the Fed right in here. So this is the pattern that I have been seeing in here, and that has not changed. Now, if we get above this level right over here, that will change. change it, and I hope it doesn't, because then I'm going to have to work real hard to figure out what's happening in here. But over 1147.50 is going to change this pattern. What it would then do is make it look something like this. Let's say it gets up into here above that level, then corrects not as much, and then comes back up again, and then we'd be looking for tests of the weekly resistance. Right now, while we still have it in this negative stair-step pattern, this is still the pattern I'm looking for. So a test of this low back around the 1100 level out there in a couple of weeks. So right now what we're looking for in this market is this upside here looks a little early to end. So we're going to look for some choppy area here in the resistance zone, and then turning lower after that in the gold market. So it's right now, you can see where it's trading that resistance zone. This is the 89-day coming down right over here, which was big resistance for it over here, and these Fibonacci resistances here, and it got up there and then started to pull back a little bit. So we're going to look for this a choppy action in here. We're also looking for the dollar to turn back up in the next week, so that inverse correlation is likely to help it also. So in the next 2 weeks, we're looking for a move back down to 1100, and in the next week, we'll just look for it kind of choppy and then turning lower after that. So that is a look at the gold market. Next thing we're going to look at is the euro currency. Now the euro, of course, going inverse to the dollar. The dollar got that big pop, and the euro currency then, of course, dollar got a big decline. The euro currency then got this big rally. We're in this projected final intermediate period of dollar weakness that we didn't actually give credit to this little bull flag in here. So what happened is we had to revise this channel because of this little early bottom in here. Actually, that was on time, and this upturn. So you can see what it looks like now. We're looking for the dollar to turn back up, and we are looking for the euro to turn down. We also mentioned selling euro against the Japanese yen this week, and that still holds up in my opinion as to a trade that looks good to me. So we're going to look for a pullback in here. Our first target is 112.45 and then 111.60. This one 112.45 here, then 111.60 right here. These are the real minor supports over here. The odds when we have these two cycles pushing on the downside right here of having a correction are really, really high. You could see here where they were lined up nicely, and that correction that we had in here where they were kind of lined up, but you had that big decline right there. So that's where we are right now, and we're looking for lower euro currency this coming week. Next thing we're going to look at is the bond market /ZN is what we're going to look at here. Now, we were looking for a serious decline in the bond market, and we were getting that. I mean, they were really moving down nicely. You could see that right in here. Now, this low came really, really early, and this is, really has caught, I think, the bond bears, and I've been one of them, by surprise. If this is the low, it's really going to take on a different intermediate picture than I expected. So we're still in a period where there is likely some downside risk, and in the next couple of days I'm going to show you I expect the stock market to start moving up again after this downside move, which was pretty much spot on as to what we expected. So we're going to look for the bond market to have a narrow range. Now, why am I saying a narrow range? Because if this did start these advances right over here, this upside pressure is big, and that's not going to allow a lot of downside to come in here. Yet we still have this resistance area, this intermediate resistance that shows up right here. I'm going to be very surprised if bonds move out of this range this week. I kind of think they're going to be in there with upside pressure still in here and downside pressure right in here. We're going to look for a very narrow range in bonds. Support around 127.07, that's right over here, and the resistance area 128 to 128.08 right in over here. This is 10-year notes we're looking at. To me, it's going to be hard to move out of that range this week based on the pattern that we've seen there. So the next thing we're going to look at is the stock market. What I had anticipated for the stock market was that we were going to see a rally during the week, and that it was going to get up through and test that 1984 number in the S&P 500 and could get to the 2012 number. That was a big number for me. And then I thought it would turn down again. Well, that was unbelievable, as we've gone really about 4 weeks in a row with the markets moving exactly, at least the stock market, as we scripted it. And that's really nice when we get these cycle patterns working that way, because, well, it gives us a lot of opportunity to, make some great short-term trades. And we've seen a lot of that as this market has been very, very two-sided. Had some good emails about how well people have done on that. And it's certainly nice to have a two-sided market back. So we're going to take a look here at this S&P 500 on the short term and take a look at what I have been looking at. There is this pattern in here, and this 13-day low, without taking out this low, was exactly what we expected 3 weeks ago. It came down to support and had the rally. Now at this point I said 5 to 8 days up. That took us, well, this was the 5th day, and then we were right over here. Now, what it looked to me like was that as we were moving towards the Fed, was that people would start anticipating that there would be further, that there would be a rate increase, and they would start to buy in front of that. And that's exactly what happened right here. Well, we got nothing. A few people celebrated. We got just through my 2012 number, which was the big resistance zone that started there that we were looking at, and it turned down very, very sharply. So now what I want you to see is that yesterday was 11 days off of this significant 13-day low, and now we're in the 12th day off the low. The lows come in day 12 to 15, really. You can see day 12, 14 there. This was day 13 over here. So now we're in day 12. So what we're looking for in here is just another little wiggle to the downside. There is a possibility that it gets down to 1948, and if there is some throwaway 1925, I'm really not looking for that. I think 1948 area right there is about the number that any downside will hold. That's likely to be only through the early part of this week, Monday, Tuesday, and then the market moves up again. The question is it actually going to go down through Monday, Tuesday? Because it's already satisfied the cyclical count. So we're going to look for some downside little choppy movement in here and then moving up again. And I think that by if not this coming week late, but in 2 weeks out, we're going to test this area again of about 2012. Then after that, there is trouble, because the big intermediate cycle turns down, and that's when you can take out or test this 1867 level down here. This right over here is going to be a huge selling opportunity if it continues to follow that pattern, and we'll talk a lot about it in the next couple of weeks if it does keep following this pattern. Now, how the VIX lines up based on this was, well, we thought the VIX was going to kind of be in a range, but then it broke out of that range on Thursday based on the craziness. Man, if you watch UVXY trade, that thing went from like 34 to 49 in just a few hours trading in UVXY. That's really a monster trader. So here's the low in here that we were kind of looking for in the VIX to form, and now it's starting to move up. So we're likely to see, these next few days we see market shopping around, the VIX kind of moving up in here. Then we kind of think it's going to, hover in here for this week that we think the stock market can get a rally. Then after that, when we start to look at this late September, October period, where the big decline comes in the stock market, we're going to look for a big upside spike again here in the VIX. So in the next week in the VIX, we're just kind of looking for a just bouncing around, but then when we get to that period of stock market decline, watch out again. I think that there's going to be a pretty big move in there. So that is it. That's our short-term view of the coming week. Had a lot of stuff go on in this show. I was certainly had my horns up as far as ranting all over the Fed and the ridiculousness of the debates and how those are going. Man, I want to put out something out there that actually they follow and ask these important questions about these 20 important subjects that are not getting answered by any or very, very few of these candidates. So I'm going to keep putting that stuff out there. Maybe my small voice will be heard, and that's it. That is the end of our show for today. Make sure that you share this with all the traders you know out there so that we can build our subscribers and keep bringing this great content. That is Market Week for the week. I'll see you next week, and I'm always wishing you great trading.
Well, I'm going to